Well, I promised you guys a video about the former head of the Dallas Fed. He just did an interview yesterday with CNBC, this young lady at CNBC. And I want you guys to listen to a lot of the comments because she's asking him great questions. She's asking him basically, you know, there is so much infrastructure in all the stimulus packages that we've pumped out there. Isn't that really what caused a lot of this inflation? And then also with the infrastructure bill and all the other stimulus stuff, that's also the reason why we have employment not crashing. So we stimulated the economy tremendously, put a bunch of money out there, inflation went up, but then the Fed's saying, well, the jobs market isn't suffering. Well, let's review this interview, and I'm going to pause it every periodically and put in our content or comments, and then you guys make a decision on what you think is on the horizon. So let's get to it.
Robert Kaplan, former president of the Dallas Fed and currently co-chair of the Draper Richards Kaplan Foundation. Welcome.
Thanks, Kelly.
So most significantly, let's tally up the impact. And we've all seen, I'm driving on the highway now, they're doing work and it says, you know, funded by the I forget which of the three bills, there's $2 trillion in total the last couple of years.
$2 trillion in bills.
How big an impact are we talking here?
So at a 500,000-foot level, you're seeing construction spending is dramatically higher as a percent of GDP. To understand this better, you've got to go into each local market. And I do a lot of traveling around the country. What you see is many, many states, and the announcements are continuing, are announcing the largest infrastructure project in the history of that state.
Okay, some of the comments he made there is he goes all over the place, and every segment is a little different. So that's what we also say on this channel. We say you can't brush the whole country with one brush, saying the whole economy's crushing. But again, this is right from the Fed. So let's continue to watch it.
The impact of these government-enabled construction projects. When I say government-enabled, because they tend to be public-private partnerships. Mm-hmm. Is they not only affect construction spending, but they have a multiplier effect on the service sector. In a lot of these markets that are being done, you've got very tight labor markets already. So people are going to switch jobs to move into these new jobs. And so at a high level, it may look somewhat immaterial. At a local level, it's having a very material effect on these local labor markets and service sector markets.
Yeah, and I think in the labor market in particular right now, when we look at the claims number this morning, and things haven't really, they slowed last year. We kind of saw the implosion of a lot of the high value, you know, tech stuff and things like that. But the resilience of the rest of the economy is the most notable thing about this year. You made an interesting point the other day that some of the localities have to spend this money before the end of 2024. And I guess the question...
That's what's crazy out there, too. Let me interject there, because I have a lot of family members that work at city and state and localities and things like that, and they get this stimulus money, and basically they're forced to spend this stuff. So, like, here's $1 billion. You have to use it by the end of the year. We're going to take it back. Well, if you were offered that, what would you do? I'm spending the money. So you're not going to give it back to the government when they're giving you basically free money. So let's keep going with this thing.
Question is, do we want all this to happen? Because if you looked at it glass half full, you'd say, wow, the Fed's getting everything it wanted. Inflation's coming down and the economy's still strong. And isn't this, you know, is Bidenomics helping or is it, you know, counteracting what the Fed is trying to do?
Okay, so let's stop there. $2 trillion. Guys, imagine $2 trillion, okay, was in new spending by the government. So we wonder why our taxes are going up. We wonder why they're going to have to cut some services, but they don't want to cut any services. But look, infrastructure bill, $1.2 trillion, Inflation Reduction Act, which was basically the Green Deal pushed into the Inflation Reduction Act of $430 billion. And then the CHIPS Act that's helping manufacturers of chips who their CEOs are making millions and millions of dollars. They're helping them as well. So I'll keep my comments to myself right now, but they're $2 trillion in government spending, basically giving it out there saying you spend it, and if you don't, you got to give it back to us. So not a good policy right there, but let's keep going.
It is, in my opinion, it's blunting to some extent what the Fed is trying to do. It's not all bad because it means, I think without these projects, we might have otherwise been in a recession by now. So the economy stayed resilient. Many of these projects are good projects. These battery manufacturing projects are necessary, but many local officials are telling me we've had this project that we've been looking at for 30 years, and because of the government money, it was marginal until we got the government money. And so all I'd recommend is I think it means if I were on the FOMC, I'd be leaning toward one more rate increase, although I'd have an open mind going to the meeting. But I would be urging, if I were at the FOMC, I'd be urging the Fed to do a lot more work in understanding not only what's been announced, but what's the forward pipeline. Because if this money were to dry up in the out years, I think you'll see these rate increases have a lot more teeth than it looks like they have right now.
And Chair Powell, he was asked about this at the last press conference. He kind of downplayed the impact.
He did.
And we always know there's a reluctance to kind of weigh in on what the administration is doing.
And I think he said it was immaterial, although it's helping construction. And maybe at a high level it looks that way, but I think this feeds right into the wheelhouse of the Fed. You got 12 reserve banks in these local markets that I go to. It's having an impact anything other than immaterial.
Yeah.
And
Look at the local papers. I mean, again, I grew up outside of Syracuse. The Micron plant up there, $20 billion. It's all they talk about. We talked about some of the Midwest locations. Look at what's happening in Arizona. This is absolutely driving the narrative in a lot of these economies.
It is. And I don't think it's going to change the action for the Fed in the next meeting, but there'll be a point at which they're going to have to decide, should we really pause for an indefinite period? And I think you've got to understand what the forward pipeline is, because I think there's a lot more coming. We're not done all Inflation Reduction Act projects, Infrastructure Act projects. Even since I talked to you just 4 or 6 weeks ago, there have been a whole series of new announcements since you and I spoke about it.
Wow.
And I just think it would behoove all of us just to get a better grip on what the forward pipeline is.
That's a fantastic article. So let me pause it there.
What are you doing, buddy?
So you can see how he just kind of debunked a lot of things. The government is sending so much money out there in these infrastructure bills and everything else. So they're pumping still a lot of these cities. And remember, they said parts of Arizona. Think of Arizona, Austin, Texas. They're putting in, I think there's a huge hub down there for chips. So think of the pods throughout the country that has these infrastructure bills. They're usually some of the bigger cities. They're getting billions and trillions of dollars to do this infrastructure. So think about it. They're pushing this money into the economy. How? With they need labor to build this stuff. They need raw materials to build this stuff. So to do that, they need the labor to get the raw materials out. So that's why we're not seeing an employment crash, because they keep pumping the economy full of all this stimulus stuff. At some point, the system's got to crack, folks. So that's the concern here, is the Federal Reserve kind of get off the wagon of pushing down the pedal on the interest rate hikes, but also our federal government has to realize you just can't keep throwing money that we don't have. And we keep putting on it on our credit card, on our national credit card debt. You can't keep pumping that money out there over and over and over and expect nothing to happen in inflation, and then the economy kind of just to suffer. So this was a huge point that I wanted to make to everybody. So I hope you enjoyed the information that I provided here. Hope you get some context, and that's from the former Fed, the person who sat at the Dallas Fed. He ran that Fed, so he knows, and he's now not in the Fed, so he can actually speak his piece. You remember how he's saying, well, they're still looking at the top, way down from a 500-mile view. He said, but if you get your boots on the ground, it's a much different story. So I greatly appreciate you guys watching this video. I hope you found information from it. And all I ask you to do, like I usually do, is one thing. Please don't forget to give us a thumbs up. It helps us get found more and more throughout YouTube. So my name is Dan Free. I do this on a daily basis to provide you guys the economic news on what's affecting real estate. God bless, guys. Thanks so much for watching, and I hope you leave some comments down below. See you soon. Bye-bye.